Hey, welcome investors to the 40 Finance channel. Today we're going to look at Roku stock and kind of project where this one might land for 2022. This stock today sits at about $150 and rocketed all the way up to almost $500 during the height of the pandemic FOMO, if you will. But now that we're past the holiday season and a couple other companies like Google have reported their earnings, we're starting to be able to paint a picture a little bit on where Roku might land, certainly in the first quarter of the year. And unfortunately, at least through the data that I'm seeing, it doesn't look like it's going to be a strong quarter. Now, interesting side note, I'm actually a happy Roku customer, and I love the TV sets and I love the operating system. And I have about 4 of these TVs between the office and the house. And actually, if I went out and bought a TV tomorrow, I would definitely purchase a Roku OS TV over anything else. And it's because of this positive experience that I've personally had that I've always been interested in Roku stock, and it's been on my watch list for a long time. Obviously, it ran up to places that I would never follow it, but the stock does have an EPS. It's got some okay metrics to it, and now you've got a price about $150 that sits, way more than half off of its all-time highs. So today we're going to dig in and try to figure out where it goes from here. Okay, if you're not familiar with Roku, it's basically an operating system. You can either get like a USB stick to plug into your existing TV, or you can purchase a TV, a smart TV that runs on the Roku operating system. Now, all of my TVs at my house have the operating system built into it, and I think that that's the preferred way to go for most people. And with that in mind, keeping track of how TVs are selling in general is either a bullish or bearish sign for Roku, in my opinion. And now that the holiday season has closed, we can see really where 2021 has ended for TVs, down 3.3% year over year. This, of course, was exacerbated by the major supply chain issues that we saw, frankly, from summer into the start of the holiday season. But this year is officially closed now at about 210 million units, down 3% or so for the year. Interestingly enough, though, there is a projection for a bounce back, as you see on this graph, back up to basically flat for 2020 at 217 million. So I would say a bearish indicator there heading into Roku's Q4 earnings call. However, perhaps as the year lags on, if they get back to par in 2020, that could be a good thing. Okay, next on the bear side for Roku would be the Netflix user growth numbers. And obviously that this is a different service, but far and away Netflix is the #1 streaming service in terms of their reach. And if you missed the Netflix earnings call, they came in just shy of their projection for Q4. However, the big news was that their Q1 additions are projected at only 2.5 million subscribers, which was well below analyst estimates. Not only that, the number itself of 2.5 million is down from 4 million in the same quarter of last year in Q1. So Roku, just like Netflix, is going to be very sensitive to user growth and user sign up. If you didn't see what happened to Netflix stock after they missed some user numbers, it wasn't pretty, and the same thing could happen to Roku if they come up with a user miss. All right, the next thing that looks like a positive, but I think it actually could be a negative, is now that Google has reported, we have our YouTube revenue numbers, and it was a great year for YouTube. You can see ad sales hit $8.6 billion, topping Netflix revenue for the quarter. Now, even though this is a positive headline, the one thing that worries me just a little bit for Roku, this up 25% number, which is of course good news, but if we dig a little deeper, YouTube's Q4 ad revenue experienced a slowdown in growth compared to Q3, where it saw 43% growth. So again, YouTube grew, But what we saw in Q4 was it grew at a smaller pace. Impossible to project if that's going to be the same situation on the Roku side, but I'm going to chalk it up as a bearish sign for the short term. All right, so we talked a little bit about the fact that new TV unit sales are down a little bit this year, about 3%. And I think compounding that issue for Roku, at least on the new unit side, is the fact that Google and Amazon have both seen massive increases in the sales of their own operating system smart TVs. And perhaps the double-edged sword with this headline, TCL claims massive sales of TV sets running Google TV, is the fact that TCL was one of the original partners for Roku. And in fact, in my house, all 4 Roku TVs are TCL TVs. Now, just to put some numbers to this headline, during this week's CES event, manufacturers said it sells more than 10 million sets worldwide that run either Android or Google TV annually. All right, let's flip over and take a look at what Amazon's doing. And Amazon crossed the 150 million Fire TV devices line. And just as interesting here is this kind of sub-headline. They announced Ford, BMW, and Stellantis packs for in-car streaming. So going forward, Amazon's working their way into automobiles. And it's hard to figure out exactly how that's going to work. I assume it'll be similar to the old DVD players in the back of the SUV. But the bottom line is, it's very obvious that Amazon and Google are pushing their own OS platforms hard, and they're obviously investing a ton of money into expanding that market. Now, in this article, we actually get some comparison numbers here. So Amazon is touting the 150 millionth streaming device sold, right? For comparison, Roku reported 56.4 million active streaming accounts across its family of devices. So safe to assume that both with Amazon, Google, Roku, some people, like myself, own multiple devices, but we're only one household at the end of the day. So Roku at 56.4 million active streaming accounts. And they go on to say, although that's a different metric than total devices, at the end of 2020, Amazon last reported having more than 50 million active Fire TV accounts. So now we're coming into the end of 2021. It'll be interesting to see how high that number goes. All right, now let's switch over to SeekingAlpha and try to take some of these data points that I just shared with you and try to work them into Roku stock a little bit and see where we might land. Now, as we're going through SeekingAlpha, keep in mind that my affiliate link is in the description. Get a great opportunity down there to save a boatload of money on 1 year of their premium service. So definitely check that out if you like some of the stuff that you're seeing here. Now, one of the things that I like to do with my own stocks is to go back and kind of get that bullet point review of how the last earnings went. So click on this news tab here for Roku, and instead of reading all the news, I'm just going to go to the earnings news. Now it kicks off with Magnite because they are sort of connected from an advertising view. But here's the last Roku headline, okay? This was November 3rd. Revenues that grew 50% were mostly in line, but player sales wound up disappointing, and the company guided to the light side of Q4 revenues. You go down here, and this stands out to me. The quote at the time, that's a result of extraordinary demand spike from Q3 of 2020, Anthony Wood and Steve Loudon say, and they point out unit sales were above Q3 2019 levels. So nothing wrong with that statement, except for the fact that Q4 of 2021 is of course going to be lapping Q4 of 2020. Then we go down to the guidance for Q4. It's guiding net revenues of 885 to 900 million. That is light of consensus of 939 million. What I didn't see in here that I couldn't get visibility on was what the consensus estimate was for member growth or user growth during this time period. All right, so let's take a look at past performance in terms of revenue growth. So you look down this column, which is year over year. Obviously, the pandemic was a huge boom time for Roku. We know that that's drying up across multiple companies, so they're certainly not immune to this either. And what we see over the past 3 quarters in 2021, you had 79% growth in Q1, you had 81% in Q2, then the first hiccup came in Q3 where you jumped down to 50% growth. Now 50% growth is phenomenal, but it does sort of change the valuation prospect or the multiple that you might give a company that was, just 6 months ago growing 80%. Now let's look at the estimates for where we expect revenue this quarter. Q4, this is what they'll report on the 17th of February. Revenue estimate of $897 million. Year-over-year growth of 38%. So you went from 80 to 79 to 50. Now you're going down to 38. And the one thing to call out here when we look through the YouTube numbers, right? The YouTube revenue numbers grew 25%. So we talked about the fact that YouTube in Q3 of 21, revenue grew 43%. Now in this most past quarter, revenue grew 25%. Kind of interesting, right? Because Roku last quarter grew 50%. Now analysts are saying 38%. Will they get there or will they fall short? And if they fall short, we know that stocks are getting punished severely. All right, let's take a look at the annual estimates going forward. If we get to 2022, if we get guidance that falls in line with expectations, Roku is projected for a flat EPS year over year. Now, the 2021 expectation is $1.57. All right, that puts your price today at $150 at a forward PE of 99. Now, getting under the 100 mark on forward PE for a company like Roku is a milestone, certainly over the past couple years, the way the market's been going, but we know that things are a little bit different now, and folks are much more reserved about giving out high multiples to companies. The interesting thing here, if you look out to maybe December of 2023, if they keep making progress on their EPS, they could get to a $3.16 level. That gets your forward PE under 50. But let's look at it from just a straight revenue side. All right, so 2021, 57% growth. Okay, if they hit 2.8 billion. Next year, looking to add about $1 billion to that. That's 35% growth. That gets forward price to sales down to 5.5. That's not that bad of a number either. And a couple clicks off of it, you might start to get some people talking about the value in the stock going forward. All right, how about our free cash flow? Let's look at it from a forward standpoint. 64 times price to free cash flow. So to put that in perspective, like a big dog company like Google's running about 25 or so. And then, high growth tech, probably in the 50s for the ones that aren't ridiculously overvalued, but getting under the 50s and maybe into the 40s and 30s for a consumer products company would probably be the ideal situation before you start buying. All right, so bottom line for me on Roku, I don't think the Q1 earnings call looks super promising, at least from where I sit. And in general, unless they have a huge announcement, it looks like 2022 is going to be a much more controlled growth environment, which you'd have to factor in the increased competition as well. So what about stock price? At $150, is there a buy the dip number that makes sense for a stock like this? And at least for me anyway, the price is probably under $100 here as we sit in 2022. We just see stock after stock getting crushed when they miss even the most molecular numbers. And I haven't been immune to it, right? Because I'm in PayPal and that's gotten destroyed. And we've seen several others as well. If this was a normal year with less volatility, I could see a 120, 125 on this one. But it really is still running hot. not necessarily from where it has been, but in respect of what people are paying for in today's market. All right, guys, so that's my outlook on Roku stock. You know, we've got Google in the books now. Amazon's coming right around the corner. We've got sales, TV sales numbers going on. So that's where I sit on this one. I think you still got some room to come down. I certainly would not buy this stock prior to its Q1 earnings call. Bottom line is, I think there's more risk to the downside, and you're better off just waiting to hear what they have to say and try to speculate the growth for 2022. All right, thanks for watching, everybody. Don't forget to check out that Seeking Alpha special offer down in the description. Save yourself a bunch of money on 1 year of premium. As always, please give the video a like, subscribe to the channel, all the things. We will see you on the next one.